I've been a financial advisor for over 20 years, and shh, this is the blueprint to retiring early or just retiring comfortably at whatever age you want to retire. So let's jump in. And the first one is to look at how much leeway that you have. And leeway is measured in two things. The first is your debt. Do you have much debt? Particularly expensive consumer debt or large debt, a large car loan or a mortgage payment. The less debt that you have, the more leeway, the more latitude you have. Ideally, no debt, but I know that that's hard to do. The next one is, do you have a pension? Few of us do, but if you have a pension, you're in much better shape. You have more leeway, you have more flexibility. And if your pension is adjusted for inflation, you're in even better space. So those are the first two to begin with. And then within that, there's some specific questions that we want to ask ourselves. And the first one is, how are you going to get your healthcare insurance? If you're retiring before 65 in the United States, you're not going to qualify for Medicare likely. So if you retire here in the U.S., for most of us, our healthcare comes through our employer. How are you going to get your healthcare insurance? It doesn't mean you cannot retire, but it means you definitely want to think through this. Now, most of us, if we're working for our employer, when we leave, when we retire, we'll have 18 months of COBRA. But if you need a wider gap than that, if you need to cover more time than that, you really want to think through that and have an idea of what the costs are going to be before you retire. I will share that one of the main reasons that people experience uninsurance for a period of time is because they leave one job and they think that they're going to be covered by Medicare before their COBRA runs out. But you've got to be very careful because it takes Medicare a while. You just can't call them up a week before you want coverage. So working through all that health care and planning it out is super important. Okay, the next one is thinking about your expenses. People retire based on their financial needs are based on how much they're planning on spending in retirement. The first question I ask somebody when they say, I'd like to retire, I don't ask them how much money they make. I ask them, how much do you think your lifestyle in retirement is going to cost per year? And you know what they almost always forget? Taxes. And taxes are going to be a big expense. So thinking through both your expenses, but also thinking through what your taxes are going to be on those expenses. What type of accounts do you have? If all of your retirement money is in a regular 401k or a regular IRA, maybe a little bit of money in a bank account, this is fairly common. The challenge with that situation is as you take money out, and if you retire before 59 and a half, you have to ask, where's the cash going to come from? Because there'll be a penalty on a regular 401k or a regular IRA if you take it out before 59 and a half. So, but even if you're over 59 and a half, then you have to worry because you're paying ordinary income tax on that money. And the joke in my industry, it's not very funny, is that, every time you fill your car up with gas, every time you buy a loaf of bread, you have to pay income tax on that. Because if the money's coming out of an IRA, you're paying income tax on the money that comes out to pay for that gas, to pay for that loaf of bread. So thinking ahead of time as to where that money's going to come from, what the tax situation is. The other thing that's really important, I strongly, strongly encourage you, test drive living on your expenses before you tell anybody at work you're even thinking about retiring. Do the best you can. If right now, let's say that you're spending $70,000 a year, and you say, well, in retirement, I should be able to cut that back to $60,000 a year. Do what you can to live on that $5,000 a month to simulate as close as you can what that's going to feel like. Because for a lot of people, I shouldn't say a lot, for some people, they're going to say, you know what, that's more sacrificial than I want it to be. I would rather work a couple more years than live on that budget. And there's nothing wrong if that's you, right? We all have our one life to live. And while some people are willing to cut expenses to the bone, Other people say, I want to have this level of lifestyle, and that's fine. We work hard, we sacrifice to save. And just know, will you be comfortable on that level? Because the last thing you want to do is retire. Give up a job that you've been at for 10, 20, 30 years or more. Give up a salary that's probably you're at your peak earnings years probably at this point. The last thing you want to do is retire and then figure out that that lifestyle that you plan for doesn't give you the joy and the happiness that you thought it would. If it's going to feel sacrificial, you want to know that before you retire. Okay, the next thing is think through your revenue sources. What are the sources of revenue? Cash. I kind of talked about it from an account standpoint, but do you have any rental properties? Are you an owner in a business that might be paying money? Do you have dividend stocks that are going to be paying out cash? But what are your sources of revenue? The most common would be rental properties, or maybe an investment in a company that's paying some money to you every year. But for most of us, we're retiring on Social Security. For over half of Americans, they rely on Social Security for half or more of their living expenses. So we've got Social Security. Obviously, there's a challenge with Social Security. I think it'll be around. I think there is a solution, but I don't have a crystal ball. I don't know. Um, what are the revenue sources? And then how are you going to supplement the rest? So in my example, somebody that was spending, I believe I said, $70,000 a year, and they said they could bring it down to $60,000 a year. They need $5,000 a month. Maybe Social Security is going to, between the two spouses, Social Security might bring in $3,000 a month. The average Social Security check in January of 2024 was $2,000. So somewhere between $3,000 and $4,000 that would bring in. And so where's the rest of that money going to come in? And know if you take Social Security early, obviously you're going to take a haircut. If you take Social Security at 62, you're going to get 70% of what your full retirement age benefit would have been. Okay, the next thing is thinking about asset allocation. How are your investments going to be allocated between stocks and bonds? And I encourage you to think about your bonds, not necessarily as like it's 40% of my portfolio, it's 30%, it's half of my portfolio. I encourage you to think about it as years of living expenses. Because if the market does go down and the market giveth and the market taketh away. So down years in the stock market is a feature of the stock market, not a bug. And if the stock market does go down, what you want to avoid is being a forced seller in a down market. And most people end up being a forced seller in a down market for one of two reasons. They need the cash to live on, or just the mental pain, the anguish of seeing your account go down 20, 30, 40%. People can't sleep, they can't stand the pain, and they sell, unfortunately, often at exactly the wrong moment. So one way to do that and protect yourself from that is get your asset allocation right. And then think about your bonds as years of living expenses, because for many people, it'll give them peace of mind knowing I've got 3 years worth of living expenses in bonds, 5 years. I'm not saying this is what you should have. I'm just talking about the peace of mind. I should mention none of this is financial advice. And to get your asset allocation right, to come up with your financial plan, I encourage you to work with a financial advisor, preferably somebody that's a fiduciary to you 100% of the time, that can look at your specific situation and give you advice on that. And then the non-financial side, and this is every bit as important as all the financial things that I just talked about. The financial side, the non-financial side of things, is really, how are you going to spend your time? There's 168 hours in a week, and that can be a lot of time. And thinking through what your next purpose is going to be. And the best time to start thinking about that is as soon as possible. You want to be thinking about that a couple years ahead of time. A great book for that is a book called From Strength to Strength by Arthur Brooks. But it's not just about hitting that finish line. It's also about enjoying your journey until you get to retire. And that's why I made this video here. 8 things to stop doing in your 50s and 60s in order to enjoy your journey until you get to retire. Thanks for watching this one. I'll see you in the next one. Bye-bye.